Hello, everyone. Today is Friday, September 9th, 2022. My name is Evan. Welcome back to another edition of Stock Market Weekly, episode 648, presented by The Trade Risk, where it is our job to break down the most important trends, price action, and noteworthy moves across financial markets to prepare you for the week ahead. If this is your first time tuning into our video series here, welcome. Thanks for joining us. Thanks for being here. Here's how these videos work. We break up our analysis into two parts. In part one, we look at everything that went on this week in markets. We look through the numbers, pick apart everything that stands out, looks different, interesting, or notable. And then in part two, we jump into the charts. We take a detailed, close look at price action and those market trends and try and best position ourselves looking ahead. So with that, let's jump into some of the big takeaways, some of the big headlines from this week. First off, the dollar finally reversing course a little bit. It's been trading and pushing up 52-week highs week over week, and this week we finally got that outside reversal. Now it's minor at this point, but that paved the way for a decent stock market rally this week, putting in several percent higher in this shortened week for U.S. indices. We also saw Nasdaq volatility drop under 30. S&P VIX came down as well. And that, again, just helped alleviate some of those extreme oversold conditions that we've seen over the past 3.5 weeks of fairly intense selling. We've got some extreme oversold readings in the long bond. We're going to talk about that. We've got inside weeks for the metals. We've got a potential false breakdown in oil, which is quite interesting. And then we've got some interesting action here in Bitcoin as it surges, as it briefly breaks down and then quickly reverses and surges over 20K. So lots going on, lots on the commodity and dollar side. So let's jump right into the numbers here. Right-hand column, you can see again, this is the weekly returns. It was a shortened week here. Markets were closed in the US on Monday. So we had 3 to 4% gains, and it was a very even race here, pretty distributed across the board. S&P, Nasdaq, Russell, all basically up 4% this week. Take a look at the 1 month numbers. We're still down about 4 or 5%. So we are recovering or attempting to recover some of those losses that we experienced in the second half of August, first week of September. Now, if we take a look at our trends here, nothing has changed. We've still got declining 10-period simple moving averages in all of the indices here. So even though we did rebound this week, we're still declining on this shorter term perspective, but intermediate term, this 50 SMA is still rising here for the S&P, Nasdaq, and Russell. So we're still sandwiched. Longer term trend, the 200 SMA is still declining across the board. So this is the same look we had last week, and quite frankly, the last 2.5 weeks, I believe. So, we've got mixed signals still, and we'll have to see if we can hold some gains next week. We would anticipate that the 10 SMA starts to advance, but we'll see if that can actually happen. Volatility environment was encouraging this week. So we, again, did see the Nasdaq VXN. That is the Nasdaq Volatility Index here. It's back below 30. Just like for the VIX, 30 is a pretty psychological level for the market. Probably trading strategies and quants as well, looking at this type of threshold. But back below 30, that's 3 points down on the week. The VIX itself is at 22.79. So getting back to the lower 20s. Ideally, we get that back under 20. That's when we start to see, the more persistent or say encouraging rallies can incur when we start to get that number back down into the teens. We're not there yet, so let's just keep a pulse on it, but at least we're treading in the right direction here if you're bullish on this market. Now, if we take a look at market breadth, I don't know where my headline went here. This is NYSE 52-week highs and lows. This is breadth. And we still see the number of stocks declining or hitting 52-week lows, still outpacing by a good margin here the number of stocks hitting highs. So again, you can see triple-digit declines here for the 52-week lows this week. We had 582 in aggregate. We had 91 52-week highs made this week, so a net number of minus 491 stocks that were hitting 52-week lows. So again, this is not what you want to see if you're bullish on this market. You want to see these lows start drying up. You want to see the highs start to expand. We're not seeing that right now. Friday's numbers, again, preliminary. We'll see what that shakes out to once I get the final numbers in. It was probably a bit of a more positive day, and we'll need to see more of those if we are going to get a little more encouraging or even footing here, foundation built for the intermediate term. Now, if we take a look at sector performance this week, it was a very encouraging week here. So every single sector was in the green this week, which is something that's nice to see. Again, that breadth was pretty evenly distributed. We saw consumer discretionary materials and financials rounding out the top three, almost 5% to 6% gains. On the downside, was energy was the worst performing, but it was still positive. It was still up 0.8%. Consumer staples up to almost 2%. Technology was 3.27%. Again, you can see most of the sectors here are negative on the 1 month look back period. Utilities and energy, the only two sectors that you've been able to hide out in over the past month. If you did nothing, if you just kind of rode out the up and down, then you're up here in these two sectors, everything else in the red, but starting to come back in some of these other sectors. Now, a new slide I wanted to put in here was IBD's industry ranking. So IBD, they're a sponsor of ours, so appreciate that, IBD, for sponsoring the show, for making content like this free and possible. So definitely check out the links. I got links in the description of this video as well. But this is their industry ranking. So basically, just like we have sector performance we're looking at here, this is the top 10 industries this week that they're tracking. And so I'm not going to go through these specifically, but basically you can see energy and solar still the top of the list here from an industry perspective, and then oil and gas, medical, telecom, more energy, and more telecom basically dominating this list. So if you want to get a little more specific in your, let's say, trade ideas or just leadership groups, this is where you'd want to spend some time, pay attention. They keep this updated, so check out those links in the description of this video, or it's right here. Now, in terms of correlations, we can still see lots of things very closely correlated in this market. That hasn't changed. That's basically been a theme for 2022. And we are still seeing the strong inverse correlation for the dollar and treasury yields. So basically here, the TNX and the UUP, you can see how those are bright negative red numbers. And that basically is saying that they are moving inverse to risk assets or the indices at whole, and basically, gold and silver commodities as well. So that's basically been the same here. You can pause this video, take a look at some of these other trends that you might be able to sniff out in this. Again, 10-day correlations, inherently short term. Now, the problem with basically the landscape here, the environment over the past, let's call it month now, is the fact that interest rates have started or have accelerated back to the upside. And that's been a problem. And we still see that as a problem this week. So if we take a look at this slide here, the right-hand column, you can see that basically we still have 10-year yields, 5-year yields, 30-year yields, all increasing this week. So the 10-year, which is I think what a lot of folks are looking at in traders, was 3.19% last week. It's trading at 3.32% this week. So again, this continues to ratchet things up, and again, that tends to put a lot of pressure on those, let's say, far out growth risk assets that are pricing or discounting cash flows way out in the future. So this is a problem. We want to see this decline. We haven't quite taken out the June highs yet, at least in the 10-year. And that's something I think a lot of folks are looking at as well. Hopefully, in the bull scenario here on this market, if you're bullish, you want to see essentially a fade here, a lower high, and not take out those June 10-year highs. Dollar and commodities this week. So Bitcoin was at the top of the list. We're going to look at that in just a second on the next slide here. But silver and agriculture and gold all positive this week. So again, that is largely helped here by the dollar index, was down 0.65%. So again, pretty good pullback here in the dollar. Crude oil was down more significantly earlier in the week, but those gains came, we bounced back here in crude oil. So we're going to talk about that in the second half of the show as well. Natural gas, though, did not benefit from the dollar index. Now, natural gas has kind of been moving the opposite direction over the past few weeks anyhow. It's been one of the stronger commodities that are still holding, pretty positive trend and kind of pushing recent highs, but certainly unwound some of that action this week as well. Now, Bitcoin is something I want to talk about. Usually we save charts for the second half, but I'm going to sneak it in here. Is a short-term chart. This is actually a Twitter chart I posted earlier in the week. But basically, actually, let's see, did I mess this up? Yeah, so this was actually supposed to be the first one here. So essentially, this was the setup we had at the start of the week. We had a Bitcoin consolidation here that was getting extremely tight. So we had essentially 9 days of overlapping, very tight price action here for an asset or commodity like Bitcoin, depending on how you want to define it. Very, kind of unusual, or even if it's not unusual, what you basically can, are guaranteed here is some explosion in volatility. You're going to get a range breakout, and we see this as, students of price action in all markets. But, we sort of, highlighted this chart here and basically identified, look, we don't know which direction this is going to go, but we've got two targets here on which way this ends up spilling, either below 19.5, look for, a 1,500 dollar price move lower, or look for a move back up to about 21.5 or so if this starts to spill up over 20,500. And certainly I said look for the next week to see if this could happen. Ultimately it came in the next day, and it basically achieved our first profit target here, and kind of got exactly where you'd expect kind of a measured move like this to happen. And so that occurred right away. And that's really not the interesting chart. The interesting chart is this chart. This is the sort of present snapshot of Bitcoin right now. So I took this, moments ago. Obviously prices are still moving, but what we basically had was this short-term breakdown, which we just looked at on those previous charts. And it essentially tagged perfectly some of the lower consolidation, the lower trading range here. Of course, we had a wick all the way down to about 17 or so back in early June, but basically, the lows of this range here has been, kind of hanging around 18.5 or so. And we essentially tagged it. And the action that developed off of this squeeze, this bar that is in progress as I speak here on Friday, we're up 10% now. And we totally reversed course and ripped over this consolidation, this downtrend line, and we're doing it on heavy volume. This candle hasn't closed yet, but this is looking like it's going to be the heaviest up day since the bottom here in June 13th. So I think this is actually pretty significant. This you could almost consider as sort of like a retest of this consolidation range with a very violent reaction here. Again, we need to see how this follows up. Can it hold? Does it, get follow through action? But I think this is pretty significant here. I think this is a good trade opportunity. I think your reward to risk is pretty tight. I think you can define risk against, these lows here. And you could make a good case to trade all the way back up to about 25,000, giving you about a 2-to-1 to 3-to-1 reward to risk ratio here in Bitcoin. So I like it. I think this is a nice move here. I think it could, it's certainly extended a little bit in the short term. Maybe you get a, kind of a drift lower here back down around 20,000, maybe get one more shot at it. But if it can hang in above 19.5 or so, or obviously a stop down here, I think this is interesting. Usually don't share trade ideas like that in the first half of this video, but I think Bitcoin is certainly pretty interesting. So that is it for the first half of this video. We're going to continue on. We got lots more to cover, price action just like that, and more charts. So if you do want to get the second half of this video, if you want to stick around for some more, head to thetraderist.com/SMW. If you're not already there, you can buy just this episode. $5 gets you the rest of this episode, or you can subscribe to our monthly subscription. $15 a month just gets you access to all of our full-length versions here that we do once a week, every weekend, to prepare you for the week ahead. So that is it for me. Thanks as always for tuning in. Hope you had a good week out there, and we'll see you back here next week.